Hey, good evening, everybody. Welcome out to this morning, Saturday morning online workshop. We appreciate having you join us. My name is Ferre, and we do these webinars, Steve and I together. I'm sitting here next to Steve and Swenson, and yeah, we're happy you all took the time to sit down and join us.
Yeah, absolutely. We try to hold these events or these online workshops about every month, and it gives us a chance to, introduce people to tax liens and deeds that have maybe never heard of them. I'm sure some of you, this may be the first time you've attended a live event. We have a lot of people that watch us on YouTube and that watch some of our videos online and end up coming and visiting some of the websites and signing up for one of these free webinars. So we're excited to have you out today.
Yeah, it has always been important to us, I think, to be able to offer training that was affordable, and that could really show people how to do things. We've never really been the type to try to hold back information because we don't feel like it's information that holds people back. It's not a lack of information anyway that is always holding people back. There's more to it than that. But we should probably start though with a little bit of background or history about us, because some of you may be new to us and may not really know anything about who we are. So Steve and I are cousins. We basically grew up about a block away from each other, and we've been best friends since about third grade. So we've known each other for a long time, but the actual first introduction to tax sales was Steve.
Yeah, I started off in real estate as a real estate agent when I was 21 years old. And so at that time, my broker invited me to attend a auction. And as we drove over to this auction, I didn't know anything about it. He kind of explained the process to me a little bit, that this was a tax foreclosure versus a mortgage foreclosure, and just explained that it was, going up for sale because of delinquent taxes. But, that was kind of the first chance of seeing property selling it at a live tax foreclosure auction. And at that time, the real estate market here within Utah was really pretty good. People were putting homes up for sale and getting 2 or 3 offers above their asking price. And so to be able to see property sell for just a small discount, or for, a pretty huge discount, was incredible to me. And I started talking to Shade about it, and we started trying to learn everything we could about it.
Yeah, which this was back around 1999 or so, and it was an interesting point in the history of tax liens and deeds here in counties.
Really 20 years ago.
Yeah, it was about 20 years ago, with the way that the internet had begun to change things. Right around 1999, people were beginning to use the internet regularly, and we were beginning to see county websites and online record capabilities were online, and that was really what opened the door to all of this. Was access to online records and our ability to do research. But really, in the beginning, though, we had just the hardest time trying to figure out anything about how it really worked. I think that a year into it, I was almost more confused than I was when we started.
Yeah, well, part of the problem was if you tried to find books or programs or anything about tax sale investing, so much of it was outdated. In addition to not even providing information explaining how tax liens and deeds really worked, also the process of investing back then, and that's part of the problem, is all of the training programs were based off of sending in, letters to county officials and going down to county courthouses and spending, several days going through and researching, old county records and maps.
Yeah,
where
really time-consuming.
Everything started, being available online, and so all of that stuff was really, irrelevant, no longer usable.
Yeah, and another problem we ran into was when we did find information about it, it was generally describing the tax enforcement system in a specific place. and did not give us any kind of an overview about how it worked, across the United States, or they would treat one system like it was how it worked everywhere.
Yeah.
And so for us, the solution eventually was we gave up on those training. I mean, actually, we went to great lengths to try to find training. It wasn't like it was just one or two books. We actually went and sought out jobs for gurus, seminar company gurus, so that we could try to get access to their materials, because we thought that would be the key, that once we obtained their expensive training program, that it would have all the information that we would need, and we could just have success from there. But that's when we realized that the training was terrible and wasn't accurate at all.
Yeah, if you were a training guru from, about 1999 to about 2005 or 6, there's at least as you were a tax sale investor.
Yeah, we had your program.
we probably, tried working for the company, or, as a coach or something within the organization to try to learn as much as we can. But really what it came down to is we just had to start attending auctions, and we had to figure it out ourselves, because the information was so vague that, and there were so many different states and rules and enforcement systems that, really it just came down to us going through each state and reviewing how that state handles their auctions, reviewing the state law, and then from there being able to figure out kind of overall how the whole system works.
Yeah, kind of a breakdown of how many total systems there are, that work, and how they are separated and divided up, and eventually we were able to start buying things. We were able to start making sense of it, and it wasn't too long after that we were hired by that we started a business basically, and were hired by a large seminar company to private label their materials. So we were just kind of the people behind the scenes. We would, they would put their logo and their company information over it, and we would just basically provide the training and help with some of the fulfillment.
Yeah, kind of the first step, we over a period of about 2 years, we created our 750-page home study program, which is kind of our first home study program that we created. And that program kind of was I guess not revolutionary, but it did help kind of break down the 3 systems and make it a lot easier for people to understand. And really that's kind of where we started working with all these training companies, was, they had our program and wanted to essentially offer it to all of their students. And we were kind of the behind the scenes guys. So we worked with a lot of the largest major seminar companies. We were involved in helping write books for TV infomercials. But we were really, as I mentioned, kind of the guys behind the scenes, not, the one up there on the stage necessarily. We were the ones that were teaching at the events, and teaching online as well.
Yeah. Now, over that time, we taught a lot of people. I think we made a lot of great relationships, and we worked with a lot of people, but we weren't pleased, I guess, or we weren't satisfied with a lot of things about working with seminar companies. Seminar companies are first and foremost sales organizations. That's how they're structured and set up, and the vast majority of them that we've ever witnessed or seen are not good at all at their fulfillment, about on fulfilling on what they claim to be able to do, and that always that bothered us about them. And the pricing and not having any flexibility, not being able to set our own pricing bothered us. There were a lot of things that we didn't like, and eventually we decided to split, get away from the seminar companies altogether, and provide our training just directly to the public, so that we could set our own prices, so that we could determine things like what we were going to teach and how much it would cost.
Yeah, exactly. So they used to sell our home study program in fancy books and CDs for anywhere between $2,000 to $4,000 with a year's worth of access to our website. And so what we decided to do is, let's just take all of that, let's make it digital, let's put it online, and let's go ahead and let students go ahead and sign up for, $39 a month. And essentially, that's how we started our membership program, and really that's kind of where we've grown to the point where we are now.
Yeah. In fact, now we have we've got a pretty good sized little group of personal coaching students that we work with in that program, and that's been absolutely amazing because for some reason a lot of the people that we were working with in the beginning didn't have a lot of capital, and so we ended up trying to figure out the best way to help teach people how to do things, and really the ultimate teacher is buying and selling. That's what really does teach you. But what's been amazing though is to watch some of these new coaching students just earn incredible returns that sound that don't even sound real at first when you're talking about properties that don't cost very much. And really that's kind of the magic of tax sales. They're really unknown to the majority of the population.
Yeah, absolutely. And that's kind of what we want to talk about today is tax sale 101. What are tax liens, what are tax deeds, kind of going through and explaining exactly how they work and how you can take advantage of them.
Yeah, something else that we want to talk about as well is about the fact that right now is the best time to get involved with tax liens and deeds in history, really. I don't think there's ever been a better time than right now. The number of opportunities is just continually growing. And one thing to understand as well is that when the internet came around and county websites started to pop up, really what happened is for the average person with internet capabilities is it opened up floodgates of opportunity with property. Suddenly you have the opportunity to buy property everywhere, or liens, whatever it is. Now is really a good time to get involved with it, better than it would have been even 20 years ago.
Yeah, absolutely. It's definitely simplified the process, and it's made it possible for us to invest in almost every state. Not every state has online auctions, but most of them do now, or at least a portion of good portion of them. And with over-the-counter opportunities, there really is just so much opportunity where before you needed to really spend a huge amount of time, a huge amount of money
you had
traveling.
To travel pretty much, really.
Yeah, down to the county courthouse to do it. So, why would you get started with tax liens and deeds? Well, first of all, tax liens are one of the best ways to earn guaranteed interest rate returns.
Yeah, they are hands down safest investment out there that brings in a high interest rate return. Which, for tax liens, they can range, maybe go up to about as high as about 18% generally. There might be a few cases where you can get a little bit higher than that, but it's generally going to fall between maybe about 10 to 18%.
Yeah, exactly. And the property itself is acting as collateral. So, when we're talking about tax liens, the property itself is collateral for your money.
Right. Well, a lot of it comes down to the nature of liens. Liens are powerful. They prevent you from being able to sell a property or transfer ownership. Liens can also lead to the loss of the property eventually if you don't pay them off. And what the government places against properties is not just any kind of lien either. It's a first position lien. It's a lien that's issued by a government, which means that they have priority or precedence over everything.
Yeah, exactly. And so in addition to tax liens, there's also, tax deeds and tax deed foreclosures. And tax deeds are really the cheapest way that we've seen to buy real estate. There's a lot of strategies out there to buy real estate below, cost, but we have not seen a better way to do it, or a cheaper, more profitable way than through tax deed investing.
I can almost guarantee that the cheaper way to buy property doesn't exist.
Yeah.
Because this is the only way you can buy property in the U.S. Where the party selling the property doesn't have a financial interest in how much it sells for. Outside of the opening bid amount, when counties end up foreclosing on a property because of delinquent property taxes, they'll offer it up at the total amount that's owed in taxes and fees. So we're generally talking about a couple of years worth of taxes, which is a very small amount generally compared to the property value in most cases. And so, when counties sell those properties, their only objective and their only real goal is just to collect the money that's owed to them. But for investors, it creates an amazing opportunity to buy property that might start off with an opening bid that's less than 10% of what the property is estimated to be worth.
Yeah, absolutely. You know, and what's also nice about tax sale investing is there's, you know, over 3,500 different counties. You know, there's probably over 1,500 or more different cities to hold tax sales, or some type of other government, entity. And so there is just so much opportunity. There's always going to be opportunity, in every single month. There's going to be new auctions taking place.
Yeah. Understanding how county governments or local governments work is something that will help you quite a bit when it comes to understanding property tax enforcement in general. Local governments are responsible for providing a lot of services that we see around us every day. A lot of the things that we think of as government are actually provided for by local county governments. So in other words, local governments are responsible for things like public safety, police and law enforcement, fire departments. They're responsible for the judicial system. They're responsible for public education, which is
court systems.
The court systems.
Really.
The public education alone can eat up more than half of a lot of these counties' revenue. Just public education alone, and it's really just the tip of the iceberg on everything that they pay for. And much of what they pay for, are ongoing services that have to be constantly paid. So the issue for the county, and they don't have an unlimited amount of money. They operate just like a business. They bring in a certain amount of money, and they have money going out. And so, really, for counties, that property tax is absolutely essential. And collecting that is important. The other thing about it is if there wasn't a good enforcement system in place, nobody would pay it. So obviously there has to be an enforcement system that's in place, and usually what that's going to lead to, mean is the risk of potentially losing your property. That's really what they'll do. But it's like anything else. You're late, they're going to start charging you more late fees, things like that. Eventually, if you go long enough, then you can lose it. But understanding how counties operate will help. But again, counties actually don't just determine how they're going to which enforcement system they're going to use. This is actually something that comes down to state law specifically.
Yeah, exactly. So there's 50 different states, and each one of those states has determined a type of sale that they're going to use. Now, if we're to break down those systems, we could kind of break them down into three systems or three different types, that being tax lien certificates that many of you have heard about, earning interest rate returns, the tax deed foreclosures, and also tax redemption deeds. These are the three types of tax sale systems that are used here within the United States.
Yeah, and these are three very different investments, completely different investments. The outcome of each of these three is really completely different, and your objective. For instance, tax lien certificates, our objective with the tax lien certificate is to earn that high interest rate return, meaning that we're earning rates of 10 to 18% annually, or in other words, that it's accruing at maybe 1.5% per month is what it's accruing at. But again, our objective there is not to get a property; it's to earn that high interest rate return, because the vast majority of liens redeem. Or we've got the foreclosures there. The cheapest way to buy properties, foreclosures, it's just outright properties that have been foreclosed on because of taxes and then are sold to the public. And the tax redemption deeds are kind of a weird hybrid between the two. We're going to talk about each one of them more in depth here.
Yeah, absolutely. So like Shay started to get into, tax liens are essentially, your opportunity to earn guaranteed interest rate returns. And so what a tax lien is, it's a lien that's been placed against the property because the property owner didn't pay their property taxes. So I own a home, I didn't pay my property taxes this year. I live in Arizona or Florida, in a tax lien state. Next year, they're going to go ahead and issue and place a lien against my property, and then offer up that lien at the yearly tax sale.
Yeah. Now, the only real reason for creating the lien for the county is to enable them to collect the delinquent taxes that are owed to them faster. That's what's important to them, is collecting that money faster. And so they really can't control when that delinquent owner pays it off because they're delinquent. And so what they need is a way that they can control that, and liens are a good way to do that. They create a lien and place it against the property whose taxes are delinquent. And creating that lien and placing it against the property does a couple of things. First, it forces the property owner into a position where they have to, they're going to have to take action because they've got a lien against their property now, so they can't sell it. And it also gives the county something to sell immediately. So suddenly they can sell that lien, for the amount owed in taxes and fees, and they've collected their money immediately.
Yeah, absolutely. Everyone wins. The investor is making an interest rate return. The county is getting their money, and the property owner is, is given time to, repay or to come up with the tax money without losing their property.
Yeah, they get a grace period for delinquent taxes where they don't have to worry about losing their property to foreclosure like they would have prior to systems like this, where we have a lot more leniency here. So, tax liens, though, ultimately, it's important to remember that the only reason really to create the liens is so that the county can collect that money immediately and now. But it's also important to note that tax liens are all sold with a redemption period attached to them. Every tax lien has a redemption period. And the redemption period is the duration of that grace period for the property owner. It basically, for the lien holder, it represents the time frame that they have to wait before they can take some kind of action with the lien to try to foreclose on the property. So their hands are pretty much tied during that redemption period as far as taking any kind of action or doing anything to try to force an outcome.
Yeah, absolutely. But really, that gives us the best opportunity as investors. Not only are we earning an interest rate return, but if the property owner doesn't pay back, then we do have that foreclosure right to enforce them paying us back our return, or we are able to get the property. And usually when you're foreclosing on tax lien certificates for property, it's under 10 cents on the dollar that you're acquiring the property for. It very well could even be 3 or 4 cents on the dollar that you're able to acquire the property for.
Yeah, now the vast majority of the time, tax liens redeem. Being late on your property taxes is not unusual. It's very, very common. And so what is uncommon is people losing their property to foreclosure because of delinquent taxes. That doesn't happen in most circumstances or situations. The vast majority of the time, even if somebody's late with their property taxes, what do? They might wait for a time period there, but eventually, as their bill goes up with different kinds of fines or fees, eventually they're going to pay it off. And when they pay the county off, essentially what they are doing at that point is they are redeeming the lien. So let's just back up for a second here. Counties create these liens so that they have something to sell, so they have a way to collect the money that's owed to them right away, but they need the ability to sell those. And so to do that, they schedule an auction, or a tax sale. And there are 3 things that happen on the day of that sale.
Yeah, essentially, first, the tax lien will go ahead and be issued on the property. That's essentially when it's going to be issued. Number 2, it's going to start accruing interest. And number 3, that's when the redemption period is going to begin. So all 3 of those things are going to start on that day of sale.
Yeah, and the redemption period actually begins even if the tax lien isn't purchased.
Good point.
So let's say that the tax lien's offered up at auction, but nobody buys it. The redemption period still, began, and that lien is still accruing interest. Now it's not going to pay out interest to anybody, but
to the county.
Yeah, I guess, to the county. That's true. Aside from those 3 things, all of those happen on the day of the sale. But once that, after the day of the sale, you are inside the redemption period, and that means it comes down to the property owner and when, if and when they choose to pay their property taxes. And when they do pay that off, if they do pay that off, the way that we're notified of a lien redemption is by getting a check in the mail.
Yeah, absolutely. So, really there's only going to be two scenarios. Either we get paid back our money, we get the check like Shade mentioned, or we go ahead and have the opportunity to foreclose on the property.
Yeah, so for example, all right, let's say that we're dealing with Florida has a maximum rate of return of 18% on their liens, and they have a 2-year redemption period. So let's say that you were to buy this lien and you pay $1,000 for it, and you're making the maximum interest rate return, let's say, because you buy it over the counter, which we'll get into what that means more. But you basically say you're earning 18% on the lien. Now, let's say that the property owner waited for the full 2 years to pay, the county what they owe in delinquent taxes and fees. If that were the case, then after 2 years, you would receive a check in the mail for your initial amount of $1,000 plus that 18% for 2 years. So the total return on it would actually be a 36% return. So your check in the mail would be for $1,360, or that 1,000 plus the 360 in interest, and yeah, basically from there you would go and reinvest. But that's exactly how the investment is supposed to work.
Yeah, exactly. Kind of like this scenario one, which shows that the property owner is essentially doing what we kind of described, where they're paying the county's cutting the check, and then at that point, and this is kind of an important point, at that point, you want to reinvest that money into a new tax lien. Otherwise you're just going to, quit making, or put it back into some other type of investment.
Yeah, now that redemption period is important because once it goes past that redemption period, or once that expires, the lien changes. It's no longer an inactive lien or a lien that can't be used. Once the redemption period expires, that lien has foreclosure rights. So, what that means is that the investor no longer needs to sit back and wait for something to happen. They can now force the issue by foreclosing on the property. And what they're going to do is either, depending on where they're investing at, it could be as simple as just letting the county know that you're ready to foreclose on it. Or it could be as involved as you needing to do the entire foreclosure.
Yeah, exactly. Now, when Shay says you do the entire foreclosure, usually we're going to be hiring an attorney. In tax lien states, there's always going to be some type of attorney there locally that handles tax lien foreclosures. And so we've kind of built that into our cost, and to understand, well, if I do have to foreclose on this tax lien, it's going to cost me $1,000 or $500 or whatever it is. It kind of depend on how big the process is, on how much it's going to cost, but we'll go ahead and do the foreclosure. The chances of getting to that point is only going to be 5% of the tax liens you buy. Like we've said, 95% of all tax liens will go ahead and redeem. You'll get back your money. So you're only going to have this scenario 5% of the time, but when you do it, you'll have a chance of getting that property.
Yeah. When you are able to foreclose on a tax lien, it's going to be a home run, especially if you've bought well. If you're buying good tax liens, it should be on properties that are desirable in one way or another. And so really, tax liens work out incredibly well. And if you buy enough of them, you will end up foreclosing on properties. It's just the way it works there with the numbers. But it's not like some kind of a scavenger investment strategy or method or something. It has nothing to do with that at all. In fact, it's the role that we play for the county is crucial because for lots of reasons. But the county needs investors like us to help them make this system work.
Well, and and even just the county, even just the community, because as these properties go into disrepair, if there wasn't somebody stepping in and taking care of the properties, Usually when a property goes all the way to foreclosure and you acquire the property, it's not like, there's a family living in the property. Most of the time, when you get to that point, these are properties where somebody has died, passed away, they've abandoned it. It could be renters from some out of state where they're, where the owners just have forgotten about the property.
Yeah,
There's a number of different reasons.
Could be lost in some way. I mean, people unaware of it.
Yeah, but we personally haven't been in a situation or seen a situation where, a family's getting kicked out on the street. And so that's kind of a myth about it more than actually being reality. In fact, the one situation where there was a family with a property that we bought, we were able to give it back to them for our cost, and it ended up, working out pretty well for them. So that's one of the great things about these type of properties is when you do buy them, you buy them for so little that it gives you so much flexibility.
Oh yeah, it gives you an amazing amount. Now, if we're talking about liens, tax liens work best as a long-term investment strategy, meaning that you can't really predict when it's going to redeem, and so you have to plan for that maximum duration or the redemption period. So they're not really a short-term investment, even though sometimes they can redeem short-term. But in terms of long-term investments, though, the rate of return is high, and it has a level of security that's unmatched. There's nothing else out there that can offer you 14% and also be secured by real estate and backed by state law. But these are a couple of examples of liens that are very secure, and you can see based on the numbers, that the lien amount is tiny compared to what the property value is.
Yeah, absolutely. These are tax liens that were picked, that were available on some of our over-the-counter list. And you can look at each one of these properties. They have good value. We're looking at a good interest rate return there. And so if you're looking at, the top property being under $400, $379 backed on a $55,000 property, that's going to be a good investment. $1,100 backed on a $71,000 on a $66,000 and $1,400 on a $90,000 property. Each one of those properties, your money's protected. Chances are that property owner's not going to lose their property for $1,000.
Yeah, the more valuable the property is, the more likely it is, that it's not going to result in foreclosure. People don't like losing money, and they certainly don't want to lose property, to foreclosure. So, if one good way to pick out great tax liens is to pick out properties that are desirable. For instance, you may not want to live in one of these homes, but in terms of the numbers, which is all we really care about, the numbers are amazing.
Yeah, but as from an investment standpoint, any one of those properties would be a good investment standpoint.
Yeah,
they're all pretty clean. You can see the grass is, needs some work on there, but it has newer siding. The roof looks, pretty good. All of them really look pretty good. All of them have pretty good roof. When you're looking at kind of that basic stuff, none of them look run down.
Yeah, and so with all of these, you could be sitting back and earning, a good rate of return like 14% annually or 16%, and your money is very secure, because basically what's going to happen is they're going to pay off their property taxes at some point, or if they don't, you can foreclose on the property. It's going to be one way or the other, though.
Yeah, in fact, one of our students just recently foreclosed on a bunch of their tax liens in Florida, where Florida does the foreclosure for you and puts it up at the tax deed sale, which we're talking about now. But he was able to get back all of his money. He made 18% off of his tax lien certificates. Plus, when you do the roll up and pay off all those other tax liens in Florida, you make 18% off of that as well while it's going through the foreclosure process. So made a good return on his money. Now he can go ahead and reinvest that into more tax liens.
Yeah. Now, tax deeds, it's a system that's used in about roughly a third, maybe almost half of the states. And what it is simply a redemption period that begins when the person is delinquent, and when that redemption period expires, state law grants the county government and local government the power to foreclose on on the property after that time period's passed. So really, you could call them tax foreclosures because that's really what they are. They're just being foreclosed on because of delinquent taxes, and the county then sells them to recover that that amount owed to them.
Yeah, exactly. So like Shade said, the county's going to go ahead and foreclose on the property, and then they're going to create a deed, whether that be a tax deed, a special warranty deed, a land patent, a quit claim deed. It's all going to depend kind of on the county and how their law, but they're going to go ahead and offer that, meaning you are buying the property deed. You're buying the property essentially free and clear. In fact, the only thing in most situations that can survive a foreclosure of this type, because it's what's called a judicial foreclosure, is going to be some type of other governmental lien, like a city grass cut lien or some type of state or IRS lien.
Yeah. In fact, the foreclosure that properties go through when it comes to delinquent taxes, that judicial foreclosure is powerful foreclosure. It is, in fact, most of you, when you think about or hear the word foreclosure, what normally comes to mind are bank foreclosures. But the reality is bank foreclosures are really, well, when you sign a mortgage agreement, one of the things you sign away is your rights to a judicial foreclosure. There is something called the power of sale stipulation inside the mortgage agreements, and every borrower, or I'm sorry, every lender requires you to sign this. And essentially, what you're doing there is making sure that you won't be going through judicial foreclosure, and they do that so they can go through it quicker. They want a faster foreclosure. So basically, if you miss a few payments, then suddenly it's gone. Whereas with the judicial foreclosure, it is a little bit longer process. But on the flip side of that, when a bank forecloses on it, they're not really actually foreclosing. They're just it never actually went out of their possession. It was always in their name. Even though the borrower may have defaulted.
Yeah, they're just kind of cutting off your right and offering up their interest in the property
to the next person.
And really one other point about that type of foreclosure auction is that you're just really buying the bank's debt on the property. So if there's other kind of judgments, if there's liens on the property, if there's back taxes on the property, if there is a second mortgage on the property, anything like that, it's going to still attach to the property because it didn't go through a judicial foreclosure.
It actually didn't go through any kind of foreclosure, really. Yeah. I mean, other than the bank calling it a foreclosure, it didn't actually go through a foreclosure. And having a property go through a true foreclosure is a complete advantage for us, because that extinguishes all of those liens or encumbrances that can be attached to it. So a lot of times, there can be strategies out there where you can pursue something called pre-foreclosures. It's where you're trying to buy tax sale properties before the sale. But that's something that we've never wanted to pursue, because we want the properties after the sale, after all the liens and encumbrances have been wiped away.
Yeah, well, you've really got to find the right property if you are doing a pre-foreclosure, because it's got to be free and clear of mortgages and things like that, or the deal's got to be at least profitable enough where you can pay off all of those debts and still make money, where it just goes through judicial foreclosure and now suddenly all of those debts are erased.
Yeah. Now, when it comes to collecting money and foreclosing, counties are really careful. They do everything by the book. Tax deeds, when they're foreclosed on, the opening bid is going to be the total amount that's owed in taxes and fees. So you might be looking at 2 or 3 years worth of delinquent taxes, but that's about it. Whatever the property sells for, beyond that opening bid amount, is known as the overbid or the overage, and the county doesn't even take that. They simply put it in an account, to give to the property owner at the time foreclosure. But
Yeah, the one thing that's nice about tax foreclosures, like Shade said, the opening bid is going to start at the delinquent taxes, penalties, and fees. And so when we're starting at just that amount, usually it's starting around 5 to 10%. And also the county doesn't have an interest in how much it sells for. They're just trying to recoup their back taxes. And so that gives the opportunity, based on the competition, for us to buy the property at opening bid amount, or 5, 10, 15, 20 cents on the dollar, kind of depending on the deal and the competition within the area. But it really is one of the cheapest and best ways to acquire real estate.
Yeah, we had a really good question here that came in just a minute ago as we were talking about that foreclosure. And it says, what happens to IRS liens? And this is a great question. Whenever governments issue liens, they are considered or known as first position liens. Okay, meaning that they're always going to rise in front of standard liens or encumbrances, claims against the property. Those first position liens always end up taking priority over that. Well, IRS liens are a first position lien. So really, a couple things could happen. If you're buying tax liens, you don't have to worry about an IRS lien because you're not buying the property. You can buy you're just basically buying a lien against the property, so you don't have to worry about it. Now, let's say that you're looking at tax deeds. If you're to buy a tax deed, it could have an IRS lien on it. And what exactly would that mean? Well, the IRS places the lien against the property because they're trying to get the owner to pay some large amount. And the majority of the time, they're just like the county. They don't want the property either. They just want the money that's owed to them. And so when push comes to shove, a lot of times the IRS will not necessarily take properties unless they see a way that it's going to help them collect, everything owed to them. If we were to buy a deed, actually, we could find out the IRS amount. But even if we did happen to buy one that had an IRS lien against it, from there we could actually contact the IRS, notify them about the purchase, and they have a short period of time. I think 90 days. 120 days. They have 120 days to come to a conclusion on what they're going to do with it. If they decide to pursue their lien and foreclose on the property, then you're going to get paid off, and tough. You just have to walk away. But oftentimes they'll just decide to release the property.
Yeah, and a lot of times the county will go ahead and let you know if there's an IRS lien on the property. So we were just recently looking at a California auction, and on the list as you pulled it up, it had which properties had the IRS lien on it. Like Shade said, they're usually going to, just go ahead and release the lien unless it's a more expensive property. In fact, we list the IRS auctions on our website, and there's probably only about 20 or maybe 30 properties a month in the entire IRS, that get auctioned by the IRS. So it's not like a huge thing. So usually if it's not a real expensive property, they'll just go ahead and release the lien or depending on how much that property or that lien is. But here's some examples of properties that have come up for sale recently. The first two properties are Washington tax deed properties. And you can see the opening bid amount. This is pretty general when we're looking at opening bids, $16,000. And both of these properties are I actually did a thing. One of them was worth, this one to the right is actually worth $300. And then, also Florida property starting at $5,000.
Yeah, which not uncommon at all. We see this quite often, and we can focus on all different types of properties with improvements, and also vacant or raw land. Which if you are an out-of-state investor, if you're looking just for the best deals on property, then buying raw land can be fantastic. An awesome opportunity.
And in fact, here's 3 property deals that were done by some of our coaching students recently. Properties that were picked up. In fact, the 2 I think all of these properties have actually sold now.
Yeah, they all have.
But the first property on the far left was actually picked up for $100. So there is opportunity out there. You can see that it's a building lot, has an assessed value of $6,000, probably has a market value a little higher than that. So, picking up a property that's valued at $6,000 for $100 is pretty incredible by most people's accounts. And then the property in the middle was actually a real good deal. He just finished up on that and received a pretty good profit on it, but he paid $30,000 for these 27 acres.
Yeah. And, and on the right, we're looking at a little commercial parking lot that one of our coaching members bought and was able to turn around and make about 400 or 500% on it. It did incredibly well on it. And yeah, these are different kinds of properties in completely different areas. And really, as far as member examples go, I think we should put up pages and pages here, because we've got a lot of coaching members over the last year that have bought and sold a lot of property.
And in fact, we just had, quite a few even just this week and last week that have sold properties. We've been helping them where they're selling their first property. They bought deeds, and now this is the first chance they're actually going through the process of not only, finding and researching and buying, but actually selling property now as well.
Yeah, I mean, really, to know tax liens and deeds, to go through the process of buying and selling tax deeds, you become a total real estate pro, because you learn the nitty gritty ins and outs. I mean, you learn the most difficult aspects of real estate that a lot of people that are involved with it for a long time still don't understand.
Yeah. If you can get tax lien and deed investing down, you can really do any type of real estate.
Yeah. Now, redemption deeds are the third category that we have. Basically every state in the country uses at least one of those, these three systems here, and there are a couple states that use two. But redemption deeds are a unique system that's used in a handful of states. It's not a really common system, but it's used in some states like Texas is the main state that we see it with, but also Georgia and who else uses it?
Hawaii does kind of to a degree. We have a few that we've listed in there as redemption deeds, and really what it comes down to is that, redemption deeds are much like a tax deed, meaning you're bidding up the price like a premium bid, like you would at a tax deed auction.
Bidding on a property.
Yeah, but there's still a redemption period attached to it like a tax lien. So in the case of Texas, you can actually have ownership rights during, the redemption period.
Yeah. So, for example, in Texas, the redemption period in Texas is 6 months for most land, and 2 years for homestead properties or farmland. Yeah. So the way that it works, basically, when you buy the property, a redemption deed, you're buying this deed, but you don't immediately have the power or ability to sell it. They haven't granted you the deed yet to the property. So it has an added time delay there. But in Texas, you can actually take physical possession of the property, though, during this redemption period. So if it's a house, you can take possession of the house, during this redemption period. What is also nice about the redemption period is that it often pays out a flat penalty rate versus an interest rate return like liens accrue. A penalty rate is just a flat rate. So in Texas, they pay out a flat 25% annually on anything that redeems. So it means if you buy a property and it ends up redeeming a month later, you're going to get back what you paid for the property plus 25%.
Yeah, there's a couple of different things that really kind of set redemption deeds apart. Kind of first being that they're usually going to have shorter redemption periods, 6 months, a year. besides the homestead properties being 2 years, most of them are under a year. Also, like Shane mentioned, you're going to get a penalty versus an interest rate return. And also there's going to be a redemption period attached to the deed. But when you're buying redemption deeds, you need to buy it like you are owning the property, like you are going to own the property. So, like a tax lien certificate, we'll buy tax lien sight unseen without using the property, because we know we're not going to, we have a very small chance of owning it.
Yeah, we know that they're going to redeem.
Yeah, with redemption deeds, you've got to look at it 50-50 at the very least, if not even more, that you're going to have a chance to own it, because most likely you probably will.
Yeah, I think that's
or at least a higher percentage.
Yeah, much higher. I think it's good to go into it with the 50-50 perspective on it, because I think it can go either way with redemption deeds.
They also offer higher penalties as well. And some of them, Texas 25% return, Georgia 20% return. So pretty good returns as well.
Yeah, and you can see these are the opening bids on some redemption deeds. And redemption deeds can work really well if it's a homestead property. What homestead properties are is it is a type of exemption that people can qualify for that helps to reduce how much they pay in property taxes. And in order to qualify for the homestead exemption, it has to be an owner-occupied home. So it has to be the person that's living there. It can't be something owned by an investor or something like that. And so on those ones though, it's 2 years, a full 2 years on those properties. But most of the property that sells in Texas is going to fall under 6 months.
Yeah, absolutely. And so you can see the opening bids amount here on these different properties range from, $3 or $4 grand up to about 30 grand. And the values of the properties range, from $67,000 up to, over $500,000. But those are the different types of opportunities that come up every single month at different tax sales. So, if you live in Texas, if you live in Georgia, if you live in one of these states that has that opportunity, and in Georgia and Texas as well, some of those states have auctions every single month, or at least have the opportunity to have auctions every single month if they have enough inventory.
Yeah, in fact, there are tax sales happening all across the country all the time. In fact, in talking about the buying methods here, live auctions, on-site auctions are the most common way that tax sales are conducted, and that's still the case even today. There are still lots and lots of counties, lots more that have on-site, live auctions than those that have online auctions. Online auctions are the second. Basically between these three, these are every way you're going to buy, tax liens or deeds. Pretty much going to be within these three. Online auctions popped up about 10 years ago, maybe more like 15 years ago,
Yeah.
20 almost. Right as we were getting started was Florida was already, they already had websites. They were the first ones in Arizona.
Yeah.
But anyways, and then over the counter there is the third that we'll talk about.
Yeah, exactly. So, live auctions, like Shade said, are happening all the time. Most states, even if they've gone over to online auctions, will still have counties that hold live auctions. And this is a great opportunity to attend and to buy property at live auctions, because the one thing about live auctions is you're only dealing with the local competition.
Yeah, limited amount of competition, just to the people that are in that building or room with you, competing directly against the same properties, versus when you get involved with an online auction, and there can be lots more people, or at least the potential for a lot more.
Yeah, in fact, just looking, and there's some live auction happening in Wyoming that I think we should go check out. One of the tax lien auctions coming up next month, just to kind of go and maybe even document that experience, just because attending a live auction, that's how we learned. We didn't have enough money when we first started attending auctions, especially local auctions, to invest at the tax sale. You know, here locally,
Yeah, not in the deeds especially.
Yeah, you had to have 50 to 100 grand to try to compete on the good properties, and we didn't have that kind of money, and so we just started attending them, trying to learn and to figure it out when we first got started at 21, 22, 23 years old, and you know, seeing how it worked, and then from there was able to you know, kind of figure out how it worked and go on and create what we have.
Yeah, the first liens we bought were tiny. You know, I think mine was for, you know, $67.
Yeah, I got a $112 one as well. And so, you know, we didn't start out with a whole lot of money and just wanted to learn the process. And then as you learn that process, then it really opens up more and more opportunities.
Yeah. Now, online auctions, like we said, they're coming around, but we'd like to really be able to show you them more than talk about them here. They are simplifying everything about the investing, though. They're making it much easier to get the information, to do the research, and to buy.
Yeah, absolutely. You know, tons of counties are moving to online auctions. There's, you know, there's more and more opportunity, and it gives you the opportunity from being anywhere in the country, really anywhere in the world, and invest in tax liens, tax deeds.
You know, the third type here or opportunities with over-the-counter investing, and this is a unique opportunity. When we're talking about over-the-counter tax liens or tax deeds, we're talking about something that was offered at an auction, but for whatever reason it didn't sell. So unsold properties or liens, unsold liens go back on the books with the county. Unsold deeds basically become county-held land, you know, county-held property, and that's an issue. You know, counties don't want to be holding on to a lot of property, but for us as investors, over-the-counter investing has some advantages or some opportunities. Now, obviously, there's a lot of leftover junk in over-the-counter lists, but we're more concerned about how much we pay for stuff, and you know, also what the value, you know, of the property is. And with over-the-counter investing, we get this opportunity to go and look at stuff that can be bought just simply by paying for it.
Yeah, and, you know, in addition to just buying over-the-counter properties, there's also areas out there, states, counties, where they have inventory that they have excess inventory that they need to get rid of. And so what they do within some of these areas is they'll let you submit offers, or they'll discount the offer amount. So instead of, you know, let's say the property is $2,000 in back taxes, you can submit an offer at $250 in that area, or you know, $100 or $500 or whatever it is. But it gives us an opportunity to really buy properties for literally pennies on the dollar. I mean, that example of that we had of our student that bought the property of $100, that's a real example, and we have, you know, literally dozens and dozens of those type of success stories from our coaching students and from our members that are able to go out there and do that.
A lot of the properties that they're buying, a lot of them have paid as little as $50 for the properties that they're buying. And again, we love the low price. It's pretty much a property giveaway at that price. And if you're wondering why they would do that or how that even makes sense, so for the county, they don't want to hold on to land, and if they are holding on to it, they can't collect property taxes on it. So for the county, they have some incentives to get these properties out there so that somebody can start paying property taxes on them again. You know, the longer these properties sit on the books, the more accrues in what's owed, and they can quickly get to a point where they're upside down or not attractive to a buyer. And you know, if that's the case, they're never going to get any better because the amounts are only going up. So you know, at some point, counties have to decide that they're going to forget about what's owed there, and they just want to get new property owner into the property. And you know, like for instance, in some cases, after property's been offered, they'll put up maybe all their over-the-counter properties. They'll do another auction and offer them up for $100. Everything starting at $100 bid.
Yeah, in fact, a couple of weeks ago on one of our member calls, our weekly member webinars, we you know, went through the process and looked at some properties that had sold in California to resell starting at $100. So, there was tons of different properties in California. In fact, the list was about 1,500 different properties that were being auctioned starting at, the minimum bid of $100. So, there is different types of opportunities, and we're not just talking about tax deeds either. There's opportunities to purchase tax liens as well. So if you're interested in earning interest rate returns and generating those type of returns, you can do it through over-the-counter tax liens in addition.
Yeah, we have a really good question here, or kind of a comment. They're just saying, I'm kind of scared of due diligence, sight unseen, especially out of state. And this is totally understandable. But at the same time, though, things have changed dramatically over the last 20 years. And we have a lot of tools today that we didn't have then. Also, we can adjust our our investing to make it possible to invest in out-of-state properties, sight unseen, by doing certain things. So, for instance, you're not going to buy something like a house or any kind of structure sight unseen. You just don't do that. What you might be able to buy sight unseen, though, is a vacant lot, or a building lot, or some kind of a piece of raw land, because you can see everything you need to see there from if you can get all the information you need to get from the county records and from satellite images, the property itself, the land, is what it is.
Yeah, our general rule when it comes to investing in sight unseen, if it's a structured property, either us or somebody, we have somebody who will go ahead and take a look at the property for us, or we're going to do it ourselves. But with land, like Shade said, that gives us the opportunity to do that based off the county records. But really, in any of that type of things, when it comes to being scared or nervous about getting started, it really is about getting educated and understanding. Because if you understood exactly what you were looking for, if you knew, what the risks were and you evaluated those, you knew what the property value was, you knew what the buying process was, then you're no longer scared.
Yeah, it's only scary to you right now because there are so many unknown variables, and because it's something you've never done before.
It's completely normal.
Yeah.
I mean, in fact, that's really our, that's part of the reasons why people join our membership program and why some of our members become coaching members, is because they need that additional education, they need that additional knowledge, and some of them are able to do it through our membership program and able to get the training they need through our books, our weekly webinars.
Kind of helps them overcome that fear of making a mistake or doing something wrong, to mess it up. We do a lot of things that I think help out a lot here in the beginning, so that you go through this a few times and you're going to feel like a pro. Once you've done it, it's much less scary, moving forward.
Yeah, even just going through our home study programs, by the time somebody's actually gone through the home study program and actually read the workshop guide and the quick start guide, they're going to at least have a pretty good understanding of tax sale investing, more than most people that you're attending the auction. That's one of the crazy things that we notice is you started attending auctions that, that there's a lot of people who really haven't done a ton of education and really don't know everything.
Have no idea what they're doing.
Yeah,
that happens all the time. In fact, you don't want to be the person that has no idea what they're doing investing, spending a lot of money. There's no reason to do that. We see people make mistakes all the time.
Yeah, so in getting education, you can go ahead and become a member. Our membership program, like we said, is $39 a month. You can cancel at any time. We offer a 30-day money-back guarantee, and that's going to give you access to all of our tax sale list, our training, really being part of the members forum. You can ask questions that are answered by tax sale coaches. If you need some additional training or you need some hands-on help, our Vegas boot camp really could be a good opportunity for you. Yeah, October 11th through the 13th.
Yeah, and it's not very expensive. It's pretty low cost for a full 3-day event, and we're going to be covering a ton of content there.
Yeah, this is a 3-day training event. This is, in fact, in the past, we've held this event We've charged, almost $3,000, $29.95 for the tickets. And we've decided, because most of these people that are going to be attending this event are members of our either our coaching program or members of our website, we've decided for members to discount that ticket down to $995. So if you're interested in attending, it's going to be 3 packed days of training. And what's going to be nice about it as well is, like we mentioned, most of the people that are attending, we still have tickets left, but most of the people that are attending are people that are either coaching students or members. So this is a training where we're not going to be going over fluff. We're going to get into some high level due diligence. And we also
it's going to be a buying tour, really. What our goal is, with people, over the course of this boot camp is to buy property, and what's amazing today is that we can do that from a boot camp. Really, we don't have to be on site there with the property for very many things anymore. In fact, even for things like on-site evaluations, we can have that done and the information sent over to us. So yeah, it's amazing what we can accomplish now from the internet, and that includes with everybody in a group here as we're working with also everybody individually to locate and to find properties. And kind of go through that process there of researching and determining which properties to buy, and then going through the process of buying it.
Yeah, absolutely. So contact us if you have any questions. You can also go to the website and view the information there as well. But we're excited about this. In fact, we've been kind of planning this particular event for almost 6 months, 8 months, And so, we think it's going to be awesome. So if you can attend it, if you are interested, let us know.
Yeah. We space is limited. It is filling up quickly, so don't wait too long, or it'll probably get filled up.
Yeah.
Anyhow, thank you so much for joining us this morning, and we'll be sure to get the replays out.
Yep. Thank you, guys.